after a favorable CPI print, but then pulled back to the 1,780 level following a 50 basis point rate hike by the Fed. Earlier on in today's Asian session, the Bank of Japan surprised the markets when it adjusted its bond yield controls higher, which hurt the dollar and as a consequence lifted the pressures above the 1,800 key psychological level. In this report, we aim to shed light on the catalyst driving the precious metals price, assess the future outlook, and conclude with a technical analysis. Last week, the Federal Reserve delivered a 50 basis point rate hike as widely anticipated, slowing its aggressive hiking pace after 4 consecutive jumbo 75 basis point rate increases. The bank in its accompanying statement mentioned that the employment market remains tight despite inflationary pressures remaining at high levels in the US economy. The Fed once again reaffirmed its goal to achieve maximum employment and its commitment at bringing down inflation closer to its 2% target. More specifically, the bank stated that in determining the pace of future increases in the target range, the committee will take into account the cumulative tightening of monetary policy, the lags with which monetary policy affects economic activity and inflation, and economic and financial developments, practically hinting that the bank is well aware of the risks of over-tightening, which may inevitably tip the US economy into a recession. Furthermore, the new dot plot in the bank's new projections shows the majority favoring the interest rate, peaking at 5 to 5.25% next year, albeit a considerable minority expects it to go even higher, yet FOMC policymakers also see the rate dropping in 2024. Validating the slowdown of the key rate delivered was the softer than expected inflation print of November, released a day prior to the decision, which pointed out that inflation eased further from its September peak. Nonetheless, inflation runs more than 3 times above the Fed's 2% target, raising concerns for becoming deeply entrenched in the US economy. As a result, the softer than expected CPI results put pressure on the US dollar, knocking it back down to levels once seen before in June of 2022, and we observed gold rising to the 1,820 level as a consequence. However, after the Fed's decision, the next day the market reacted positively to the decision, with the dollar being lifted, and on the contrary, gold fell victim to the dollar's advance, erasing the gains it met the previous day, falling back down to the 1,780 level. BOJ took the markets by surprise during today's Asian session, causing yen to rally against its counterparts, in a sign of broader strength in the FX market. The bank, as was widely expected, maintained interest rates unchanged at minus 0.10%, yet altered its guidance regarding the yield curve control. As the bank mentioned in its accompanying statement that as volatility in overseas financial and capital markets has increased, and this has significantly affected these markets in Japan. The functioning of bond markets had deteriorated, and hence it decided to expand the range of 10-year JGP yield fluctuations from the target level, from between around plus and minus 0.25 percentage points to between around plus and minus 0.5 percentage points. Worth pointing out is the fact that the decision was unanimous, something that underscored the decisiveness of the bank to proceed. The move is considered as an unexpected hawkish shift on behalf of the BOJ, yet its supportive role of the Japanese economy remains unchanged, given the bank will allow the yields to increase by double the percentage. Yet is to keep it low levels, as it would purchase a necessary amount of JGPs without setting an upper limit, so that 10-year JGP yields will remain at around 0%. Moreover, BOJ Governor Kuroda at the press conference pushed back against the idea of a monetary policy tightening, as he reportedly stated that today's decision does not mark an exit from the yield curve control policy and that it's too early to discuss an exit from the existing monetary policy settings. He also noted that the bank will not hesitate to ease further its monetary policy settings should it find it necessary. Overall, the surprise move by BOJ caused the yen to appreciate at the expense of the dollar, which fell sharply after the decision, and as a result helped put a floors under gold's price, allowing it to climb once again above the 1,810 level. Should the dollar face more shortcomings, we would expect the shiny metal to continue advancing higher due to their negative correlation with the greenback. Thank you for watching.